this is the right time to invest. So you've got the credit market supporting the capitalization, the conviction, and the demand-supply dynamics on the equity side. Yes, this seems to be the right time, I would say.
Rohit, thank you very much for being here today. We are in Paris at the Europe GRI 2025, a very traditional event for the Global Real Estate Institute. Everybody knows Brookfield Asset Management, but if there's anyone arriving here on Earth now and don't know anything about Brookfield, can you explain in a very simple way what you guys do?
First of all, thanks a lot for having me over and speaking to you guys about about the firm. So Brookfield Asset Management is really an asset manager, focuses on real assets. I think the key asset classes really that we focus on as part of that is real estate, infrastructure, renewables, credit, and private equity. And more recently, I would say, when I say recently, means over the last 4 years or so, has been the insurance side of the business. I mean, those are the key areas that we kind of focus on. Total assets under management is in excess of about $1 trillion now. So, the firm's done well in terms of establishing its network across these asset classes, as well as the business has kind of grown pretty impactfully on a global basis.
You have a role that you oversee the European market. You get to be exposed in different markets and you should know what's going on in different markets to be able to make the right decisions. How do you drive your decision-making process when it comes to understanding each market? Do you have a local team? Do you go there to see things by yourself? How does it work for you?
Yeah, for sure. It's a good question. Yes, I mean, I think when you are actually investing in any specific market, I mean, traditionally speaking, Brookfield spends a lot of time before understanding the market's dynamics, making sure that you have the connectivity with the right kind of people within, or the right kind of counterparties within those jurisdictions, fully understanding the inherent risks in investing in those markets. And so that's one part of it. The other part of it is a more fundamental part of it. It's really your conviction in that market in terms of its growth opportunities that it offers across different asset classes that we kind of, that we cover. So I think a combination of the two is one of the critical elements in terms of the start point of kind of getting into the point where we start investing. And when we do start investing, yes, boots on the ground is essential. It's like it is fundamental to the way we kind of look at investing in these markets. Understanding the asset classes, understanding the local nuances, that's one of the key disciplines that we kind of adhere to when it comes to investing in these markets.
Let's talk about the real estate cycle. 12 months ago, we were here in Paris and the sentiment was a bit doom. Everybody was worried about the real estate market, what's going to happen next. And here we are today, a year after. We are in September right now. And I feel that there is a completely different atmosphere. The capital that in the beginning of the year, when we were in St. Moritz at the Chairman's Retreat, everybody was saying, what? The capital is really paying attention to the US. Now, I feel that Europe is back in the game.
Yeah.
Would you agree with that?
Yeah, absolutely. I do agree. The sentiment definitely has changed from what it was 12 months ago to where it is today. Kind of combination of factors, right? I mean, to more fundamental, if you look at just the fundamentals of the real estate market, the fundamentals actually were kind of pretty much the same what they were 12 months ago versus what it is today. And that basically means it's held up really, really well. It's not just held up, it's actually grown. It has continued to grow. And so the fundamentals have been strong, but the issues, or should I say the considerations 12 months ago, were the state of the capital markets. When I say the state of the capital markets, both on the equity and the debt side, right? And I think what's really changed over the last 12 months is really the confidence that the markets have actually been able to get, especially starting off from the debt side of it, right? Like the high yield index, the IG index on the public markets, on the public debt markets, are at probably their all-time low in terms of in terms of the tightening of the spreads there. So the debt markets have done incredibly well, which has helped in terms of get some level of comfort for equity investors to get that there is liquidity in the market when it comes to the debt side of it. Now comes really the question of the equity side of it and the conviction that you would want to try and invest in this. Is it fundamentally the right time to invest? And it seems to be, right? Like the interest rate the interest, well, at least the central banks have been more definitive in terms of how they see the rates narrative, and like that's kind of playing out in the right direction. Inflation is definitely under control, at least in Europe, I would say, for sure. So so the fundamentals are strong, and then the key other element to take into consideration is because of the stress on the real estate markets over the last, I would say, call it 36 to 24 months or so, going all the way to like now, there's obviously a stress on the valuations, right? And so you're already starting off, right? Probably, I would say, some people would say from the bottom of the cycle now, or the bottom of the trough. You've reached the trough. You've reached the trough, and it's starting to come up. So if you start investing now in fundamentally, there's in businesses that you've got, a fundamental conviction on the demand supply mismatch and growth of those opportunities going forward, this is the right time to invest. So you've got the credit market supporting the capitalization, the conviction, and the demand supply dynamics on the equity side fit. Yes, this seems to be the right time, I would say.
Very good. Now, when it comes to countries, do you have any favorite country at the moment in Europe to deploy capital?
I mean, all the Western European economies are doing incredibly well, and we have strong conviction there. We build businesses in Iberia, as well as in France, Germany, Belgium. UK is obviously one of the biggest kind of footprints we have as well. Ireland. So like I would say all the Western economies in Europe for sure.
And when it comes to asset classes, is there any asset class that have been catching your eyes?
I mean, the key asset classes that we've been very focused on over the last, I would say, call it last 36 to 24 months or so has been student housing, build to rent, mainly the living sector, I would say. Logistics has been there's a big focus on trying to grow our presence there, on selective basis in certain kind of pockets, I would say life sciences. And then, I mean, I think those are the key asset classes we feel pretty good at. Actually, hospitality is also one of them.
This is the latest one that you have been paying attention, or no?
I don't think it's about the timing part of it only. I think it's a matter of the supply-demand mismatch that might actually exist in these local markets. They tend to be segmented in some ways, so you've got to be careful and thoughtful, and really have conviction in those markets to be investing.
Perfect. Rohit, thank you very much. Appreciate your time. Great speaking to you.
Thanks a lot, Pat.
Thank you.